And they say nothing in life is free, except, of course, if you work at Google. Bloomberg's Vera Gibbons is here to explain. Vera?
Yeah, so Google is handing out free money to its employees, essentially. What we're talking about here is Google exchanged a total of 7.6 million stock options with an average exercise of $522 for an equivalent exercisable at $309. Google's then market price back in March. Taking a look at the chart here, when Google gave out new options, as is marked with a dotted line, I think that chart's coming up in a second, the stock was about $300 a share. Now, had the stock actually dropped, everyone would have been unhappy. But the last few months, the stock's been on a tear. The stock's been trading around $500, and that means that each option now has built-in profits of nearly $200 an option, a total of $1.5 billion totals, which means employees are sitting pretty.
Why was it important, Vera, for Google to reprice?
Well, Google argues essentially that repricing was important to keep employees around for retention purposes, and that it's essentially about keeping intellectual capital and not having these guys go to the competition.
So this must make employees very happy, but what about the shareholders?
Well, that's the question. I mean, some of the analysts I talked to and some of the experts I talked to say it's not fair because investors don't get the same deal. They can't just reboot and reprice their entry when they bought shares. And the question going forward is what's going to happen to Google's value when employees, some 16,000, participate in this program when they exercise their options. I mean, value's diluted, and no investor, no shareholder wants that, Lori.
No, indeed. Vera Gibbons, thank you. Despite a 37% jump in revenue, RIM shares are tumbling about 17% on a gloomy forecast. Patricia Rue's been watching the stock and joins us with more. Fewer thumb typers?
Looks that way. Well, the BlackBerry maker's third quarter outlook fell short of analyst estimates. Now, RIM said it expects revenue between $3.6 and $3.85 billion, while analysts were expecting nearly $4 billion. Until yesterday, the stock had been on a run, but now down about 17% already today. RIM shares are currently trading at $69.98, down just about 17%. Now, the shares are also suffering on some analysts' downgrade. Goldman Sachs cut its rating on RIM to neutral from buy, while Deutsche Bank moved it to sell from hold. BlackBerry is facing competition from Apple's iPhone, which is whittling away at its market share. RIM may have to sell more phones at lower prices to compete with the iPhone. Despite these challenges, some are still bullish on RIM. Tavis McCourt of Morgan Keegan gives RIM an outperform, saying it is still a growth company and the iPhone is not the reason for RIM's forecast falling short. McCourt says it's because RIM's two new products, the Storm 2 and the Onyx, won't be launched until late in the quarter. RIM is not the only smartphone maker trying to hold its ground in this smartphone war. Palm is banking on the Pre, but last night TheStreet.com reported Verizon won't carry the Pre. Right now, Palm has an exclusive agreement with Sprint, but is counting on deals with other carriers next year. Now, losing Verizon, which has the biggest wireless network in the country, could be a big blow. Palm is counting on the Pre for a comeback after 9 straight quarterly losses.
So what about the big picture? How much has the economic downturn taken a toll on Research in Motion? I mean, is this a story?
Surprisingly, sales of smartphones have actually gone up 27% worldwide in the last quarter, as opposed to your broader mobile handset market, which dropped 6%. They need more customers like you, Lori, with 2 BlackBerries.
I do have 2 BlackBerries. I don't know how that happened, but I think I'm one of the only people out there who has a really hard time with the touchsharing, phone. And plus, I pocket dial a lot of people with the iPhone, so that had to go. Right. But what about you? What do you use?
I just have I haven't gotten into the smartphone market yet, so they need me to.
That's why it's an unsmart or a not so smart phone, because you haven't gotten in there.
There you go.
Yeah. Patricia Rue, thank you as always.